All right, everyone. So in today's interview, I'm sitting down with a close friend of mine, and that is Jake, who is the Chief Commercial Officer over at Caleb and Brown. We've worked with Caleb and Brown over the last couple of years, since as far back as 2018, as they have deep insights into the OTC or over-the-counter investing and trading world of crypto. So you get a really deep insight into some of the institutional flows, as well as getting an insight into how some of the large players interact with markets. So Jake, I'm really happy to have you, man. We're going to be talking about a whole range of different things. We're going to be talking about kind of a recap on 2024 with the ETF launch, talking about Memecoins taking off. I also want to spend some time to kind of pick your brain on how institutional investors are thinking about the upcoming election. I know that that's coming up here in a couple of days, and beyond that as well, maybe changing tides in monetary policy, things of that sort. And then try to get maybe a deeper understanding as well about what the world of over-the-counter trading looks like in crypto, and what we can kind of gain as insights in regards to that, and why it might be a preferred way for institutional investors or even retail traders to trade. So thank you for making the time, man. It's awesome as always.
No, thank you very much for having me. I think we met for the first time in 2018 when you came to our old office in the city of Melbourne. I think Bitcoin was maybe about $3,000 back then. So $70,000 as of today. So we've come a long way.
And things have changed big, and especially with the ETF launch this year. So I wanted to kind of get your opinion on that because, I know that you guys have already for the last couple of years provided, millions upon millions of dollars of inflows and outflows when people are trading in and out of crypto. And you guys are really getting a deep insight into how institutional investors are thinking. How has the sentiment changed with the ETFs? We've obviously seen that it's led Bitcoin's price rallying up to new all-time highs earlier this year. And now it's looking like we might be really on the cusp of hitting 70,000, maybe going even higher. So what's the sentiment like right now?
So earlier this year, the whole buy the rumor, sell the news notion really hit hard for Bitcoin. The ETFs were approved. There were staggering inflows. And then the hysteria and the news headlines seemed to taper off. And then, the halving happened. And I think a lot of people were thinking, hang on a second, why aren't we hitting 100K overnight? And the market got humbled. Now, it's critical to remember that that really is the case cycle on cycle. We don't just get these straight line bursts to new all-time highs and everything follows. So I wasn't surprised to see how Bitcoin performed since the ETFs. Yeah, we saw those March highs. We came down significantly and then kind of stagnated for several months. And now in the last 24 hours, we look like we might be challenging all-time highs really any hour now at the time of this recording. I will say though, from our business as a premium cryptocurrency brokerage, what we saw was a lot of clients who wouldn't have had the risk appetite to touch forget altcoins, Bitcoin, Ethereum, the majors. They started to change their perspective earlier this year, seeing the likes of BlackRock and these large household institutional names give validation to Bitcoin and the investment thesis surrounding it. It's really encouraged a lot of investors who are very traditional in their nature of how they invest to start dipping their toes into things like Bitcoin. So we've seen a lot more family offices, institutional clients, high net worth individuals start to call us up and say, hey, I think it's time I start getting some exposure to Bitcoin. And that's been the narrative for us this whole year.
Yeah, I have two stories to share in this regard. There's obviously, the huge presentations that are being conducted by BlackRock, going out there and talking about how Bitcoin plays a role in a broader portfolio as a hedge, which I think, 4 or 5 years ago, I wouldn't have imagined that'd be happening. But I even had a personal friend from a friend of mine who works in the space who is based in Brazil. And there's a large Brazilian bank that had a video about 4 or 5 years ago criticizing Bitcoin as this alternative hedge. They've since removed that video over the last couple of days. So naturally, I think what we see, a lot of banks starting to kind of step back and realizing that, irrespective of individual opinions, this is definitely a mature financial asset. The ETFs have kind of brought us there. And I'm very happy to hear that overall you're sensing that positive sentiment shift from your guys' angle. But I'm curious as well how this plays in meme coins, because obviously meme coins, from at least the buyer participation in the market has been mainly, I think, retail driven. For certain, there may be, some institutional interests like venture capital and some early stage, founders in the space when it comes to meme coins. But I'm curious to hear, what is your sentiment on institutional inflows into meme coins? Is this going to be pretty much purely a retail phenomena, or is this something that really could, we could see larger investors, even family funds or hedge funds, getting involved in?
I think that we will see a time where people are surprised as to how much smart money, as it's often coined, enters these rather ridiculous or high risk beyond belief token projects. In saying that, though, I do believe that largely the majority of money which is flowing through meme coins now is just the same money recycled from the previous Ethereum NFTs, which then were the Solana NFTs, which then were the GambleFi tokens, which are now the meme coins. As we know in the crypto space, narratives change so quickly. And when Bitcoin is stagnant and the market is not really doing all that much, new narratives emerge and no one really has much loyalty to their altcoin positions. If you're holding on to an altcoin as a retail investor because your friends told you to buy it or you did a bit of research online, if something else starts to perform better, you're naturally going to pivot out of that position. You're not a loyalist to Cardano or EOS or anything like that. Maybe you hold that token for a period of time when its ETH killer narrative is driving really high, and then all of a sudden Bored Ape Yacht Club comes about. You think, damn, I want to get some exposure to that. Then you might exit that, and now you're thinking Solana-based meme coins is where the volume is going. I do think that new retail capital is not coming in to the meme coin space all that much. I think it's the same crypto Twitter ecosystem, which is just migrating from one investment thesis to another. In saying that, though, there has been a lot of remarks and a lot of rumors of more, let's call it less retail and more institutional styled investors wanting to get that exposure, because irrespective of what a project does, when something moves by a multiple of 5 or 10x over the course of a week, in a period of time where sometimes we have weeks where even Bitcoin is fairly stagnant, anyone with a bit of capital is going to they're going to be intrigued. I think that's very fair to say. And our clients are certainly showcasing that too. A lot of clients who have been Bitcoin maxis ever since 2018 are starting to say, hey, Jake, do you guys trade GOAT? Could I buy some of that and put in a stop limit order at this price? So I'd be lying if I said we weren't getting some serious money moving into these altcoins that I didn't expect.
Well, we were talking about when we met in 2018. I could only, I could have only assumed we'd be talking about a different token symbol than GOAT or Pepe when it comes to what institutional investors might want to be buying. But no, I have to say, man, it's interesting you say that, because I sense the same, that essentially, as you mentioned, there's always new narratives in each cycle, but beyond that, really, there has just been a recycling of existing capital. A lot of the action has really been that, from old plays to new plays. And that's why I think even, as we'll talk about a little bit later on and stuff around Bitcoin's outperformance in regards to dominance, we're at our lowest point since back in August. So we're pretty much back in the sense of market ownership to where altcoins were back in August during the peak of capitulation, whereas Bitcoin's really started to kind of levy higher with the ETF inflows. So that dichotomy is very interesting. But beyond that as well, obviously, as you said, we haven't had that, I think, that major influx of new user participation. We have the new inflows from institutions, but it's coming from a cohort of very high level funds out there that are starting to allocate, pension funds as well. So I think that's an interesting dynamic to consider, that perhaps that's why we're seeing that kind of lackluster performance on the altcoin side.
It's also the risk appetite too, because a lot of institutional capital, if they're investing with large sums of money, so we have a lot of clients who are very high net worth individuals all across America and around the world, and if they've got, say, $5 million US and they want to use that to get exposure to cryptocurrency. I'll give you a real example. So one of the calls one of our brokers had earlier today, what the client's thesis was, they said Bitcoin is provided security through technology, and technology improves at a disproportionately high rate to its cost over time. They had a really good way of looking at it. They said back when they were younger, owning a computer, you'd have to be exceptionally wealthy to be able to have a computer in your house. Nowadays, you can get a smartphone for $100. And $100 is, you can get it on finance. You can make a real cost-effective way of getting access to a smartphone and computational power as a result of that. So they said if Bitcoin is inherently secured by technology in a world where technology is growing year on year, that is a really favorable pitch for Bitcoin. So if I'm investing several $1 million, which they were, I don't need to get an outrageously high percentage return on my investment. If I can outperform treasury yields, which Bitcoin has historically done, then I'm really happy. It's the retail investors who are diving into the altcoins, because if you've got a few $1,000s to invest, we have a $500 trade minimum, so we trade at all kind of sizes. A lot of clients, particularly if they're a bit younger, they might be thinking, well, I could put $1,000 into Bitcoin, but if it goes to 100K, I'm up 30% on my position from current prices. That's great. But Jake, I got to tell you, I'm looking for a 5X. So they're going straight into those new altcoins. What's the next narrative? Is it going to be DeFi? gaming, whatever the case may be. So it all just depends on the nature of the investor and their risk tolerance.
Yeah, that's a good point to determine the differences in types of investors or traders. But I have to say, this point about meme coins, this really has been one of the center narratives of this cycle. And one thing that I keep coming back to is, as you mentioned, how, at the end of the day, there's no loyalty in meme coins. And meme coins are kind of, they're momentum plays at the end of the day. I've traded them as well at the end of the day
Yeah.
because I know how to essentially use moving averages and momentum there to play them. But the thing that I always come back to where my heart is in crypto is that whereas meme coins are definitely the hot narrative and they don't have much fundamentals backing them, I keep coming back to one of the narratives that I think has been slowly but steadily still relevant in the crypto space, but holds a lot of strong fundamental potential, especially as we're talking about institutional capital coming in. And that's DeFi or decentralized finance. So I'm curious, Jake, like we have seen some progress on protocols, Aave, Compound, Uniswap, still doing things in the space, still building. What do you sense is the reason for the price underperformance? And also along that as well, do you see that this narrative could really reemerge as one of the big ones in this cycle, maybe going into 2025?
Yeah, so I really like DeFi. That's one of the sectors that I'm most bullish on. I love DeFi because in the wake of Celsius's downfall and the likes of BlockFi and so forth, you know who continued to work all throughout those hours when the market's wicking down 10% on 1 minute candles? DeFi protocols.
Yeah.
Aave is one you gave as an example. Aave is great. I use Aave myself. Heaps of us in the office do. You probably use it yourself. I'm sure that heaps of people listening are avid users of Aave, Maker, Compound, you name it. Being able to integrate from Base to Optimism, Arbitrum, it's a really awesome product and it's only becoming easier to use. Now, curiously, Aave generated more revenue in recent months than it did in its 2021 highs, despite its coin, its governance token, underperforming Bitcoin and just kind of being a fairly stagnant alt. I think it's like $150 a unit right now. Now, the thing is, we're not seeing, Coinbase is not getting downloaded to the levels it was on the App Store in 2021. YouTube viewership, Twitter engagement in crypto, it's not at those staggering highs. So I do think that Aave and a lot of DeFi protocols are in a situation where they have actually found product market fit. They have continued to improve their user interface. They've got more years under the belt of proving that they haven't been vulnerable to smart contract risk like some platforms have. So in every sense of the word, they're really in the best position they've ever been. It's just the price action doesn't show that. And it's simply largely because retail capital is just not excited about crypto yet. Now, maybe that changes with the election. Maybe that changes with further rate cuts. There's a whole number of ways you can look at it. But the bottom line is you can be a great product, a great business or service. But if you're in an economy that is not encouraging that investor empowerment, then your token or your stock or whatever the case may be is just not going to see that, which is why it's great to talk about it now, because you want to be identifying the great opportunities out there before they're seeing staggering all-time highs. You never want to be the person whose exit liquidity right at the top of the market.
Exactly. Yeah. It depends. Like at the end of the day, you can always wait for those initial signs of momentum. You have to keep your eye on the ball. You have to have those plays on your watch list because if you don't see how those narratives are emerging exactly as you said, you don't want to be caught buying at the end of the tail end of the trend. So I think that, DeFi is one of those things where it seems like there really is a dichotomy between the fundamentals and valuation, at least from a pure fundamental standpoint for core protocols like Aave and Compound and maybe even Uniswap as well, unless they're launching their own new L2 chain. But I was curious to ask you as well, Jake, because we're talking about kind of narratives and what's to come for the next couple months. We're not too far away from the close of the year, stepping into November. So I'm curious, with the 2 calendar months left, we're stepping into 2025. And there's a lot of things that are going to happen, not only here in 2024, to close the year, but also next year. We've got the election outcomes. We've got changing monetary policy. And a lot of that as well, potentially trying to scout out new narratives in crypto. Some maybe that are already here, but they're going to get bigger. But a lot of that as well, maybe new narratives that are just starting to bud up that most people don't know about. So I'm curious to ask you, first off, maybe on the topic of the election, from this perspective of working in crypto and working at Caleb and Brown, what do you see the election playing out here when it comes to crypto in the sense of a Trump victory, for example, for Kamala Harris, any other global elections as well that might play a role?
Yeah, so I think last I checked, Polymarkets, which is probably one of the better reference points, is I know that polling is notoriously inaccurate as often as it is accurate, right? But
That's a fair
polymarkets is at
take.
least people putting money behind their opinion. So it's probably a slightly better way of surveying what a probable outcome is. Now, polymarkets, I think, is having Trump as 65, 66% chance
Mm.
of winning this year's election. So I'll play to that example first. If Trump is to be the next president of the USA, well, he's made it very clear that he's pro-economic growth, he's pro crypto and technology businesses in the United States of America. So I think that will probably close the chapter of this seeming SEC witch hunt against crypto businesses. There's a lot of really good businesses out there that their customers love their product, and they're the ones that seem to be getting scolded by the regulators, whilst investors lost so much money on the likes of FTX and businesses of that sort. So I think that will put a bit of a close to that chapter, which is something that I would be quite excited about. I think that it would allow crypto businesses to be more innovative in the US. But bottom line is, if we achieve economic growth, that's just more retail capital that can go into these markets and start to see that high performance. So in many respects, I think it's quite clear that the cryptocurrency communities are quite bullish on what a Trump presidency would look like for the markets. Now, to keep things balanced, because as a humble Australian who's not voting in the US election, we need to look at things from both sides of the coin, and we have clients who subscribe to a whole variety of different political perspectives, which is great. Now, if Harris is to be successful, some people think, oh, she's not talking enough about cryptocurrency. It's not on the forefront of her ideas. She rarely mentions it. In saying that, all-time highs in the market did hit during a Biden administration. That parabolic 2021 on the back of the COVID stimulus capital that flew into the markets, people saw soaring increases in their cryptocurrency wealth. Now, naturally, things did come to a fairly bitter end, and a lot of those alts are down significantly since then. But to keep things balanced, I think that we can fairly say that both administrations can have an argument to suggest that cryptocurrency can perform well. I think that if I had to put it really simply, I'd say that a Trump administration is very clear. It's a bit more obvious what implications that will have on cryptocurrency. A Harris administration, purely because she hasn't spoken about it really, does leave a lot of questions out there. But maybe we get tighter policies, and maybe there's more regulation clarity in the space, and maybe that empowers businesses. So I'm not actually concerned about either outcome. I think cryptocurrency is here to stay, and we've found that product market fit as a disruptive asset class, and I'm not concerned.
Yeah, and to that point, Jake, I think at the end of the day, like one thing I always emphasize, I met Hester Pierce, many people from the SEC Commission over the last couple of years, and the thing that always stood out to me that I really, when I reflect back on it, I know that this is maybe not a popular opinion amongst many in crypto, but I have to say the SEC, while it has definitely not been clear, and regulatory agencies in general have definitely been a hurdle for some of the greatest companies in the space, yet have been completely blindsided, as you said, to Celsius or BlockFi, and making sure to manage the proper risk management and those elements. I think at the end of the day, the space has been able to pioneer irrespective of either
I agree.
administration. And it's with most trends in technology, it's very difficult for regulators to keep up. And I think that's the problem, is that you haven't had even a forward-thinking policies that allow for a sort of sandbox environment where things can continue to develop. And from there, we learn from it. We build new frameworks that are clear and set the framework for new innovations and narratives in the space. So yeah, I think you're spot on. I think, again, like I lean towards the element that I think a Trump presidency is probably going to be more like kind of bullish optimistic in regards to price action and more risk on activities, you said, from increased retail liquidity. But at the end of the day, I think the sector's going to make it out of the win. And towards that point, like kind of putting aside the topic of the presidency, as much as that is a very important role in the U.S., I think the really interesting thing that people forget sometimes is what really drives financial markets. And it's not always policy. It's not always if a president is in favor of financial assets or not. At the end of the day, it has to do with stimulus. It has to do with monetary policy. So I'm curious, Jake, kind of with like a 6-12 month lens going into 2025, we see mortgage rates coming back up again in the US, while the Fed has been actively cutting rates. So you're seeing a difference, a disparity between treasuries and bond market and what we're seeing in regards to the Fed's actions. So what do you sense here when it comes to interest rates, printing of money? Are we going to see any real stimulus in the future?
Yeah, so I think that, look, we did see that little sugar rush in the market when the Fed announced the basis point cut about a month or so ago. I do believe that if we have further cuts in interest rates, it probably will keep that positive momentum. in saying that, there are some very difficult economic realities that, irrespective of who is elected president in a couple of, in a week's time, those realities don't change. Like, the reality right now is, if you're a 30-year-old in America or Australia, your life is objectively harder now economically than what it was for your parents when they were 30 years old.
Yeah.
And that's really disappointing, because that's never really been the case. And it's only measurable in this day and age. The price of getting a home relative to wage increase, the increase in education costs paired with that, it's really tricky. So I think one argument could be that if things are not getting any better on a macro level, or they're not getting better at a rate which makes a colossal change, one argument is that the more alienated, and this sounds terrible, the more alienated young investors are from things like owning their own family home, perhaps the more empowered they'll be in assets and investments which have low barriers to entry, such as cryptocurrency. Because, right now, for example, if I want to go out in Melbourne, Australia and purchase a property, the paperwork, the bureaucracy, the evidence of income, assets, savings, the mortgage, I'm going to be paying, if I'm paying 5.5% interest on a variable loan, that's considered a good deal in this day and age. It's quite rough. But hey, if I want to buy $5,000 worth of a meme coin that's moving right now, my God, I can get that done on my phone whilst in the middle of this video. Yeah. So I think that barriers to entry are decreasing for a lot of asset classes. ETFs are helping achieve that as well. So that can be quite empowering in some senses. In saying that, if we do have interest rates decreasing, if we do have a change in presidency, which we're going to have, and historically any change is good for the markets more often than it's bad for the markets. So I do think there is a lot of things to look forward to, but I just think that regardless of what happens, the global economy is not going to shift on the basis of one presidential change in a short period of time. Over a 2-3 year horizon, we might start to see material changes. But for the time being, what I'm looking for is just to see, are young people and other investors who are alienated from other asset classes, are they going to be more compelled to invest in cryptocurrency? And can cryptocurrency accommodate for them in a safe and secure way?
Yeah, absolutely. I think you're spot on that. When it comes to real estate, as it's become kind of hyper financialized over the last couple of years, it's gotten to this point where housing has kind of switched from being more of like a kind of stable commodity that people can take a 30-year mortgage out, work a decent job, and still be able to afford. So people are really pushed to the brink of having to look for alternative asset classes. And exactly as you said, meme coins are kind of, I think, the prime example of that from like a retail trader perspective. Like, man, I see someone making, 5 or 10x, like, why even put money into a home anymore and stuff? If I have any hope of, making that large purchase, you're going to take the risk tail in and stuff. So that's very interesting to hear. Yeah. And I think you're right though, that like over the next couple of years, at least we've maybe seen peak rate cut, like rate interest hikes, back what we saw earlier this year. But beyond that as well, we may not move as fast to the downside as a lot of people are expecting. I think that's an interesting thing to keep in mind, considering inflationary pressures and how things are going to play out. Especially, I think AI is kind of like the interesting dynamic from an inflation deflation perspective. But speaking of AI as well, I was curious to chat with you about kind of upcoming narratives. So I know you guys do a bit of research at Caleb and Brown. You guys are always obviously getting requests from different institutional participants about kind of what positions you can get access to and buy. What are you guys sensing on upcoming narratives? I know we talked a bit about DeFi and Memecoins, but is there anything that you picture, Jake, that could really be like big in 2025? Maybe that hasn't even really surfaced yet.
So I think that it's critical to note that first mover advantage doesn't really exist that much in cryptocurrency, apart from Bitcoin, which wasn't even the first cryptocurrency in many respects. But look, Ethereum used to have well over 50% of market share of the DeFi sector. Solana is creeping up year on year there. We have hundreds of millions of dollars in the last week have been bridged out of Ethereum into Base, Solana, Arbitrum, Optimism, and that whole variety of competitors there. The playing field will change. And I do think that this whole ETH killer narrative is going to come back again. That was very popular in the late 2017 bull run. You'd remember every new protocol is like, we're Ethereum, but faster. We're Ethereum, but we have lower transaction fees. And it didn't really work. The Cardanos and the EOS of that era, I think it's fair to say that they're probably not going to flip the price of Ethereum. Whereas now you're starting to see all these inflows into Solana. You're starting to see the success of Base. You're starting to see Optimism, Arbitrum. There's a whole variety of them out there. And perhaps the ecosystem is primed for a bit less of a monopoly on the DeFi platform side of the space and the whole layer one side of the space. So I think that's a big one. What's the battle for the best layer one going to look like in 2025? And should people be considering kind of diversifying and looking at some of the more modest market caps in the space relative to their user growth, their TVL, things like that? We mentioned DeFi before. I think decentralized finance has a fantastic part of the future of the world. I think that platforms are getting better. The on-chain data suggests that these platforms are getting far greater uptake. The writing's on the wall as far as I'm concerned there. So I think that's a big one too. I think meme coins and the whole culture that just drives this, people are spending more and more time, not less time, on their phones and on social media. And these kind of little community hubs, or sometimes they're almost like cults, right? They do really take off. And I do think there is a place for them in the future. I think that people just need to assess them with the knowledge that it's either going to do tremendously well or it's going to go to zero. And you should just make assess the Sharpe ratio of that and make your risk reward decision with that knowledge in mind. Maybe don't allocate too much to meme coins. Consider some layer ones or maybe some Bitcoin still and things like that. And I do think that the foundations of Bitcoin are making a serious impact on the world. We saw a lot of people like Michael Saylor. Oh my God, the country of El Salvador, for example. So many people were investing in Bitcoin and putting their name and brand and country behind it during the bear market. And now they're seeing the rewards of that. I think that really is empowering, and it will bring a lot more capital just into Bitcoin. And you know what? I'm so certain that in 6-9 months from now, there'll be completely new narratives that don't even exist today, which are going to take the industry by storm. There's problems that need to be solved. And as those solutions come to light and as they get traction and more retail money flows in, as long as people have their finger on the pulse and they've got some good access to research and things like that, I think there's going to be a lot of exciting changes in 2025 that we can't even foresee because they're yet to exist.
Awesome, man. I like the perspective. And also, I'm going to make sure I spend some time on my next Memecoin video to educate people on the Sharpe ratio. Because
Sharpe ratio and meme coin investing is probably a bit of that's not a common way of looking at it, I would say.
I think we need to educate. You got a lot of people coming into finance for the first time, and we gotta teach them some of those important things as well. But I understand, of course, from the institutional side, a lot of people are definitely aware of this proper like risk management, or at least measurements of yields and return versus what you can get and what you can get in risk assets.
On our side, we've got tens of thousands of clients all around the world. We're a very low barrier to entry exchange. So as a premium brokerage, we utilize the brokerage solution whereby you've got 24/7 access to real human beings who can guide you through that investment journey, full-time traders behind the scenes. We're making sure you're not slipping the market when you sell that altcoin. You're not getting yourself in a situation where you're stuck out with withdrawal limits. And if you've got a question, a real human being speaks to you, not a back of the line support ticket you got to wait 30 days on. So because of the service that we offer, we've intentionally made it so we have low barriers to entry. $500 is our minimum trade size. We've got everything from celebrities, athletes, family offices, clients in Switzerland, all the way through America, Australia, and Asia. And as a result of that, we really see the full spectrum of cryptocurrency investing. So what we try to do is we just try and get a line of objectivity and facts to underpin our conversations. So if you're calling us up and saying, hey, I want to put all this money into meme coins, they're all going to go to the moon. If you want to do that, we'll help you safely invest in them. But my God, we're going to give you a call and say, hey, just so you're aware, this token wicked down 30% an hour ago. Yeah, it's up today. But like, look at the volatility on this thing. Like, do you want to diversify into some other assets? And we have those conversations, but everyone has their own investment thesis at the end of the day.
No, I like it, man. That's the one thing I think it's amazing to see, Jake, how much you guys have grown over the last couple of years. There aren't many, for example, with crypto being such a fast moving industry, you guys are one of the few brands that we've not only worked with for a long time, but beyond that, one of the few companies that I've seen consistently stay the course and be able to build that long-term brand loyalty, which I think is really awesome. And it's difficult to find in crypto.
I appreciate it.
Yeah. And I'm curious, like, to hear, like, for a lot of people who are listening here, who are like still in the interview, who are wondering, what is it like to engage with a brokerage platform that deals in over-the-counter trading and these kind of deeper liquidity pools where you can obviously, as a retail participant, but also institution, really get access to deep liquidity and insights? You kind of gave a hint to it there, but I'm curious, what does that whole process look like? And, for example, what are the best ways for people to get engaged in it?
Yeah, so we like to think of ourselves like a concierge service. You've got your local retail banks, and then you've got your private banks where you've got dedicated team surrounding your account. You've got all these new things that you can do that you couldn't do elsewhere. So we operate largely like an exchange. I mean, we buy, sell, and swap hundreds and hundreds of tokens. We can list tokens that you might be interested in. We can offer stop limits on illiquid altcoins. We can trade in corporate structures. We have no withdrawal or deposit limits or anything like that. We have banking rails all around the world, from Liechtenstein to Switzerland to America to Australia to the UK. So what we try and do on our end is we try and get the most premium solution we can that just is completely obsessed with customer experience and quality assurance. And then how do we make that accessible? Because a lot of businesses that are comparable to ours, they might say, yeah, we have a fantastic service, but unless you're trading $10 million a month through our OTC desk, you're not able to engage. So that's why we found we're not an exchange, we're not an OTC desk solely, we're a premium brokerage. And that's just our little niche in the space. And some clients, it doesn't work for them. They think, you know what, Jake, I just want to use DeFi protocols. I've got 10 exchange accounts and a ledger, and that's all I need. Awesome. We're no cost to speak to us. Reach out if you want. Don't reach out if you don't want to. And for some clients, they might think, I want to invest in this space. I'm time poor. I've been scammed before. I've been hacked. I really need the quality assurance of a premium service. And they'll reach out to us. They'll be assigned a broker with a 24/7 team around that broker. And we'll just take care of them through the journey and take it from there. We like to keep it simple.
Yeah, I think, to be honest, that's your guys' big value proposition, is that you get, I think really, I know this is maybe a broad stroke, but I sense in crypto there are two types of investors or traders. You have those who are like, really happy that the ETFs have launched now, or for example, might just use Coinbase, go buy some Bitcoin, maybe buy some Ethereum. But then there are people, as you mentioned, who really want to get tapped into the alpha, a lot of the opportunity in crypto where you can make those life-changing returns. A lot of that's going to be found in the altcoin space. But even in regards to having that net exposure to the safe assets and also new ones, having someone who's going to help you kind of navigate the seas of it, because while we would like to say crypto is definitely a much more mature asset class now, I think, than where it was when we first met.
Yes.
It's definitely like, if you're dealing with altcoins, as we just talked about, Memecoins and DeFi, all this stuff is still like wild, wild west days. It's still very early on. We finally have some established players. We have some safe bets in the market, but really being able to know which ones are going to be larger players in the next 2 to 3 years, which narratives can actually hold their weight, which ones are showing the right price signals, but also TVL growth, fundamentals. In that case, that's so much data to keep up with. Sometimes it's difficult to get access to that data as well. Sometimes it's really expensive. So to be able to have some kind of oversight from a, kind of a premium brokerage service, I think adds a lot of value. And as you mentioned, avoiding slippage, buying a token with a malicious smart contract, for example, where you're going to lose all your funds. I mean, I've had people who've just been totally broken by this. And I think overall, having that extra individual and service that can help you is really huge. So I think that's awesome. You guys have built up what you have. And I'm curious to hear as well, like, what do you guys think will be next for Caleb and Brown? Because it seems like since we met in 2018, you guys have just kept building and building and scaling. So what's kind of the big vision maybe for 2025 and beyond?
Yeah, we take the approach of just asking what our clients want us to build. So we're very fortunate to have a large engineering team here in Melbourne and staff all around the world. As a result of that, our clients will say, hey, we want a mobile app. All right, we'll make a mobile app and integrate into that so you can get your research and push trades directly through there. A lot of clients are wanting us to explore things like staking and lending, and we'll have our risk team make an assessment there. We have a asset management division, so if people want to be completely hands-off, we do have 2 funds in the US and 2 funds in Australia, which they can explore, and they can speak directly with the team and go through all the fine intricacies of that. So we take the approach of, let the clients come to us. We're in a privileged position where we can speak to every single one of our clients directly on the phone, take them out for lunch. Our staff travel to America and Canada and the likes, and we get to take people out for dinner and catch up, go to conferences. As the industry evolves, as clients have new things that they desire, our job is just to fill in those gaps. So right now, a lot of people are wanting a lot more in-depth research. They're wanting to restructure their portfolios as we lead up to this potential hopeful altcoin rally once Bitcoin dominance tops out. And it's really just a matter of having those conversations so that we make the product that our clients actually want, instead of trying to guess and then end up building something that no one ends up using. So obsess over customer experience, safeguard people's assets, make sure people get the best financial outcome when they're buying and selling in an often choppy, liquid, risky market at times. Let us take that kind of role there. And, if we need to help you out with your custody solutions, we can do that in-house. We can test your ledger or Trezor for you, walk you through the process of how to use it. again, it's whatever clients want is where we're going to dedicate our time. And that's what we've done since 2016 when we started, 2018 when you and I met. I would just continue doing that. It works. Don't fix what isn't broken.
There you go, man. I like it. Jake, this has been an awesome conversation, man. I really appreciate it. I just wanted to let you guys know if you guys are interested in checking out Caleb and Brown, I'll have a link down below in the description. You guys can check them out. You can reach out to the support staff there if you have any questions. There's a lot of great documentation as well. The overall experience, I've used Caleb and Brown before. You guys have a great platform. It's really streamlined. As I've used a lot of the other different platforms as well and traditional exchanges. It's very intuitive to use. So I think overall, this is something that if you guys haven't, set up an exchange or set up any kind of brokerage service, if you're looking to get into crypto and if you're looking for something a bit more serious that's going to help you kind of navigate through the market, I definitely recommend you guys check that out. Feel free to reach out to Jake and the team. They'll be happy to help you. But I just wanted to say, Jake, it's a pleasure as always, man. Getting to speak to you and Jackson and everyone from the team. It's always insightful. I love getting this kind of institutional perspective. And I think you really offered a lot of really interesting perspectives, especially around the monetary policy and election dynamic that I haven't heard enough people talk about. And outside of that as well, DeFi kind of reemerging. I hope that will play out. So definitely going to have you back on, man. I would love to keep up the conversation. And
Absolutely.
Thanks again for making the time, man. I know you guys keep busy.
No, I appreciate it. Well, look, all the best for everyone watching. Thanks for watching this far. And thanks again for having me. Until next time.